Hey, what's up guys? John here. They are getting so aggressive with mortgage hikes, with the cost to borrow debt going through the roof. Did you know mortgage rates on a 30-year fixed rate just 5 months ago was 2.875? Very inexpensive, essentially free money. Now they are 4.95%. So they've nearly doubled the interest rate, 2x the interest rate inside of 5 months, and they still have, some economists predict, between 4 and 6 more rate hikes coming in 2022. What I believe is very likely to happen is we're going to see home ownership get harder and harder and harder, or we're going to see a massive pullback in pricing. We're already seeing home builders pulling back, and we are also seeing home sales plummet for the 4th month in a row. In this video, I'm going to walk you through exactly what's going on in the real estate market. Please smash the like button, hit the like button. YouTube's going to share this content to educate more people about what's really going on. So this article came out today, and they say mortgage rates soar close to 5% in its second huge jump just this week. The rate for the most common kind of mortgage just surged again. The average rate on a 30-year fixed rate mortgage shot up significantly higher today, rising 24 basis points to 4.95%, according to Mortgage Daily News. It is now 164 basis points higher than it was a year ago. That's the second time this week, and it puts this week on par with the worst week from the 2013 taper tantrum, a record we didn't see being legislatively challenged a few days ago. On Tuesday, the rate had hit 4.72%, a 26-point basis jump from March 18th. The quicker than expected rise in rates has weighed on demand for mortgages and refinancing loans. This is also going to play a role, this rising rates in credit card debt and personal loans. We're going to see a big change across consumer confidence as it gets more expensive to service, manage, and facilitate loans. The rate surged on the yield on the 10-year treasury, also took off. Mortgage rates follow the yield loosely, but not entirely. Mortgage rates are also influenced by demand for mortgage-backed bonds. The Federal Reserve is scaling back its holdings of these assets and is also hiking interest rates. So a lot of people looked very smart a year, 2 years ago, borrowing 30-year fixed rate debt. Meanwhile, people that are on adjustable rate mortgages are really going to start feeling this pinch. It couldn't come at a worse time. As the all-important spring housing market gets underway, the potential buyers are already facing extraordinarily tight supply and sky-high prices. With both rates and prices considerably higher, the median mortgage payment is almost 20% higher than it was a year ago. So, to put this in perspective, if you had a $300,000 mortgage on a 30-year fixed rate at 2.875%, the monthly payment would be about $1,245. Now, with today's rates of 4.95%, it's $1,601. So the payment went up about $400. That's like borrowing another $80,000 to $90,000. So if the median home price, let's say for this example, is $400,000, it would be as if you have to now go from being a buyer that can afford a $400,000 property to one affording a $500,000 property. That's a very big change. Also factoring in rising gas prices, rising food costs, other expenses that are rising in correlation with mortgage rates. Buyers are also facing inflation on everything else in their budgets, exacerbating the affordability issues. Rents are also surging higher at a record rate, causing more potential buyers to be unable to put aside money for a down payment. In addition, as rates rise, some buyers that will no longer qualify for a mortgage. Lenders have been more strict about how much debt a borrower may take on in relation to income. Economist, and this is also going to happen as well because banks are going to start pulling back to be a bit more conservative to balance out the amount of risk that they've taken over the last few years. So we're going to see it getting harder and harder and harder to obtain financing. So what does this mean? It means that at this point, the smartest thing you can do if you're intending to buy a property is to get your credit score as high as possible to make sure you look like a Class A borrower so that you have lending options and to make sure that your financing is in order. If you're thinking about buying a property now, I would speak to a couple mortgage brokers and get an idea as to what you could do to increase your odds of getting the best mortgage if you're not 100% ready to pull the trigger at this moment. I personally think we could see a big correction. We could see some big problems in this economy. So many things are happening at one time, and it looks like over the next 3 to 6 months, we're going to see just a big modification in this economy, and especially if they're going to continue with these mortgage hikes. I don't see how this is all going to just stay together. Economists are already beginning to revise their sales figures lower for the year. Lawrence Yun, chief economist for the National Association of Realtors, said Tuesday that he expects the rate to hover around 4.5% this year after previously predicting it would stay at 4%. NAR's latest official prediction is for sales to drop 3% in 2022, but Yun now says he expects they will fall 6 to 8%. NAR has not officially updated its forecast. Now, generally in a hot market, what do we hear? They say when you hop in a taxi cab and the taxi cab driver is giving you stock tips, probably a good time to sell your stock. Well, the last 2 years have been just that for the real estate market. People have been talking nothing except house hacking, house flipping, real estate wholesaling. Everything has been real estate because rates have been very low. A lot of people have been able to enter the market, and property appreciation has been through the roof. Rents have been rising through the roof, so landlords have been making a ton of money. All of these things, plus the great migration of metropolitan cities, all of these things have been happening at one time, so everyone's been excited about real estate. But I'm curious, how is this going to look with rising rates? How is it going to look with rising insurance costs and rising costs across the board? I think that the sex appeal from real estate is going to go through a modification. I don't think people are going to look at real estate as sexy if they're paying, let's say, 20 or 25% more for a property than they were a year before. Either values are going to have to come down in a big way, which I'm not sure that's going to happen. And the reason I'm not sure about that is because there's so much money in the system, there's so much money on the sidelines, and people simply don't trust the dollar. I mean, who would? When they're talking about more stimulus programs, they're giving away so much money, they're printing money nonstop. We're simply just holding this almost worthless fiat currency. You might as well pile it into an asset that will hopefully hold value and that will have real utility. That's the big question. So I think what's going to happen is if values do pull back, there's going to be so much money chasing that asset that it's not going to matter. It's almost going to be, the erosion of the middle class. But I do believe there's going to be big buying opportunities for people right now that are thinking about hopping into the real estate market, that want to run out there and make a purchase. I just don't think it's going to be this moment. I think it's going to be maybe in 3 months, maybe in 6 months. It's so hard with these predictions because if we look at what happened in the last 2 years, it's been death of 1,000 cuts. It's been so slow. Everything's been so slow. So it's so hard to tell you when I think it's going to crash or when I think we're going to see, not really a crash, when I think it's going to kind of pull back and the sex appeal on real estate is going to pull away. If we have 4 to 5 or 6 interest rate hikes coming this year and about 25 basis points per hike, what does that mean? It means that rates are just going to continue to rise. So I do believe this is the best time to fix your credit and to get everything in line to purchase, and definitely not a great time to be a renter. If you're thinking about, I'm stuck, I can't buy, well, I would definitely figure out the best way to increase income, clean up the credit, and put yourself in a position to purchase, because the last thing you want to do is over the next 2 to 3 years see property values, properties really just transfer to the big firms, and then ultimately renting for these big firms. A really good way to look at this is look at online advertising. These huge corporations, what they've done to online advertising, how expensive it's become. What do you think is going to happen with rents? They're going to do the same exact thing. They're just going to keep jacking up the prices through the roof. I think that renting long term is not going to be the best option. Learning about real estate now, especially when people are questioning real estate, is going to be the best time. When people are fearful, when your mom and your uncle and your brother tell you, do not buy real estate, don't buy, that's generally the time to buy real estate. You always go against the trends. You go against the trends, you're likely going to make money. You go with the trends, and as they always say, the sheep get slaughtered. Drop your comments below. Let me know your thoughts on this. Do you think we're going to see a pullback in the real estate market? Do you think we're going to see some very, very big changes coming in the next 3, 6, 12 months? Drop your comments below. Hit the like button. When you hit the like button, YouTube's going to share this content. Subscribe here. Consider subbing on my second channel. And if you want to get started on YouTube and start your own YouTube channel, I'm going to have a sale on my YouTube course this weekend. I'm going to leave the links pinned down below for everything. All right, guys. Catch you later. YouTube Success Blueprint. To learn more about growing your YouTube channel and creating passive income as a YouTuber, register for my YouTube Success Blueprint by clicking the link in the description below this video.